Well, lately, the stock market has been on a wild roller coaster ride, and we've been forced to experience the twists and turns. Many people want to know, is now the time to buy stock, or is it too risky? Our next guest has the answer. She joins us by Skype. We welcome Richmond financial expert JB Bryan back to our live show. JB, it's always wonderful to see you. This is a different way.
This is a great way, though. Fantastic opportunity to encourage everyone to include technology into their life. So thank you for forcing this upon me.
That's right.
Indeed.
We've all been kicked out of that nest, and we're facing new challenges, but that can bring some opportunity. You were with us just a couple of weeks ago, and we were watching the market be put on halt. We were watching this roller coaster ride in action, and we still are in so many ways. But as you've framed it, the market can be considered kind of on sale right now. Is it a time to buy or not a time to buy?
My question is, when is it not a time to buy? It's always a time to buy. And I keep getting those calls like, this is a great time this is a great time to buy. Like, what do I buy? And it is always everyone that is participating in that monthly saving and investing into, especially their IRA or their work retirement plans and putting money away. You're buying constantly. So I think that there's this desire to get that perfect selection, that perfect stock. But I think that we can learn more by seeing now the importance of diversification and always adding money consistently over the long term. And you'll see like some of the graphs behind me that will show you that over the long term, even if our short term trends look dramatically steep, and that over the long term, that if you're consistently seeing this as a buyer's market all the time, then you'll take advantage of the opportunities now. But there were opportunities 2 weeks ago, 2 years ago, a month ago, and there'll be opportunities to buy in ahead. So I think that the most important thing is to realize that your time horizon really answers that question. If there is not at least 5 years between you and the desire to use that money, then the stock market is not the appropriate place for your dollars, regardless of how good you think that particular investment is or how cheap it is today. The stock market is not something to be played with by short-term investors. It's not a get rich quick. To me, and of course, I believe that there's a science behind investing, and you just take advantage of the opportunity to continuously buy into our businesses. And that's what you're buying. You're buying into our businesses and the business growing and growth and profit, long-term potential. So when is it not an opportunity to buy into? That's a bigger question. It's not for those of you who think this is a get rich quick, that think of it as a casino, a big bet. No, we have historical long-term performance that helps us make better decisions. So make sure you take advantage of getting financial advice now more than ever, setting up a good, strong relationship with an advisor that you trust, and look at long-term buying possibilities. Always.
So JB, I'm thinking sort of in the analogy of there's a ruler, right, that you're standing up next to, and it says you must have this time horizon to ride this ride. And this roller coaster ride of stock market, right, is just taking this dip. But with these market corrections, we're going to come back up.
That's right. I mean, every time you think about that you have children, and these children they've lived through it, but they won't really remember it. But this is your opportunity to continue to add and build for their future, as much as your current concern may pull you to not think about the long term. And that's for everyone out there at home, that we invest as much for ourselves as we're investing for our next generation. And so this will just be a blip. I mean, think about all of the changes. I was just looking at a chart, and they were talking about like the biggest percentage drops for the Dow Jones Industrial Average go back, till the 1920s. And I mean, throughout the last 100 years, we've had times such as this for different reasons that have impacted our economy. And the amazing thing, I must add, Jessica, is that statistically, more people will be impacted by this financially, the virus financially, than they will be physically. It's amazing if you think about it. So we have to be very careful, and I appreciate you having this discussion because what you do will impact your long-term financial well-being. We have to be more careful than ever to not make emotional choices. And for some people who might see this as an overwhelming buying opportunity, and then the next day, that same money they just added and they see it dip, they're more apt to be the one who will emotionally grab out as well. So we want to know that you focus on logic, focus on your long-term goals, focus on who you're actually investing for, who is this money for, and what did I base my buying decision on? It still needs to be based on the solid numbers of that company, or what is that index. Even if you're an index investor, what are the components? What are the businesses in that index or that ETF, the exchange traded fund, or that mutual fund? Get a better understanding of what you have your money invested in before we buy more and before we consider selling as well.
And it's okay right now to put those hands on the grab bar and just hold on for a little while. But thanks for the advice, JB. It's always wonderful to see you, and I like
Thank
that.
you.
When is it not the time to buy? But
That's right.
do so wisely. JB Bryan offers free weekly money seminars and webinars every Wednesday and Sunday. You'll find a link to all the information on WTVR.com/VTM. We sure appreciate her being with us. Stay tuned. We'll be right back with more Virginia This Morning.